Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, February 18, 2022. Please don't forget to hit the like button, subscribe to this channel, and share this video with others. We had quite an eventful week. Stocks are more likely to go down now than to go up. We'll look at market breadth, we'll look at various levels to watch on the support resistance lines. I think a lot of things are dependent on high yield bonds, so we need to look at them so they make sure, stop falling at the very least. And Treasury bonds, I think, are trying to make a stand, because of the increased fear in the markets. Same as gold. Gold broke out last week, actually a few weeks prior, but, really great week for gold. We'll look at cryptos, and it's possible that people will actually pay you money to get cryptos off their hands, just like they did with oil once. If you are a subscriber, stay tuned for, we have quite a large number of stocks, especially you can see there's quite a bit of gold related stocks that are breaking out, and we're gonna look at those in the members only videos. So if you're not yet a member, go to MasterChartsTrading.com and sign up for one of the products, especially the indicators and the newsletters. All right, let's look at S&P 500. Here it is on the daily chart. So notice on this chart we have the indicators, the green, blue, red, and yellow line. You can use them on daily, you can use them on minute chart. So if you're going to use them on daily or shorter, you leave the settings as 250. If you're going to go to weekly, change the settings to 52. If you're going to go to monthly, change the settings to 12. If you want to trade intraday, such as day trading, number one, make sure you're using a continuous security, such as futures or, for example, gold. So here's futures. It's a continuous security. In other words, it's traded 24/7. We can go to 1 minute chart. Here it is on 1 minute chart, S&P 500 futures. You could have traded it, for example, here's the breakout, and breakdown. Now, I prefer to trade on daily, weekly, or monthly. Okay, it's easier for humans this way. Okay, so looking at daily chart of S&P 500, number one, you can see this blue support resistance line right there, and it was broken actually a while back on the 25th of January. But then we bounced, and I thought we were going to make a new high. We clearly didn't. We tapped out, and then we broke down again. So now, yesterday, or the day before yesterday, 17th of February, right there, we saw a strong move down, really strong selling right there. And today you can see that the price came up. Okay, once again, I'm gonna zoom in. See, the price came up today to the blue line, touched it, and then sold off. So we're currently below the quite important, support resistance line. This is a bullish level still, so we're still thinking about buying. But right this instant, I really don't want to think about buying. I just want to see what happens. So next level, then today we really, we closed below several previous lows. So for example, this low right there, 14th of February, it was taken out. So now we have new lows coming up. But in my experience, the more important levels are support resistance lines. So we're looking at least 4100. You can see I'm reading it right off the chart, 4128. That's where my support resistance lines are, the red support resistance line. So at that point, if we touch that, that's, caution. If we look on weekly chart, so weekly chart looks quite, great if you're bought back here, and then now you should be out. Yeah, you made lots of money. You bought on 18th of May 2020. You sold it probably now, and you should be out. So what's important? This is a weekly chart, so stay with me. Notice that on the weekly chart, we haven't touched the blue line since last, 11th of since May 2020. Additionally, I'm gonna zoom in. Right there. So what happened this week? This is a weekly close. So this is a very important to understand that today we closed on a weekly basis. We closed below this important support resistance line at 4,400. This is the first time this happened since, you can see, the 2020. So we're looking right now at significant selling. People are not really interested in buying anymore at this point. Another 5% down is where we're going to get to that 4,100 till 4,128 level. That's 5%. At that point, it will be caution. And then another 10% is if we get to the yellow support resistance line, which is 3,900. At that point, it's unequivocal bear. So at that point, if we get there, it's only 10% down. If we get there, I would be starting to think about selling short. And so would many other traders. So right this instant, we're not really doing much. We're just watching the market. I'm not really interested in buying. Potentially, you want to sell it short, but it's a little bit tricky. But the important thing is this is a weekly close below this significant level, 4,400. So we need to be really paying attention to this now. If we look at Dow Jones, same picture, and correlations are enormous between Dow Jones and S&P 500. So again, we sold off. We closed again below this 14th of February low. On the weekly time frame, we can also see that we did same thing. We closed below this blue support resistance line for the first time since God knows how long, since 2020. You see, we stayed there above this line for 90 weeks, so close to 2 years. So we need to be watching this very carefully. NASDAQ is surprisingly weak. Usually S&P is weaker than NASDAQ. In this case, S&P is actually slightly stronger than NASDAQ. So NASDAQ broke down even earlier in January, 19th January, right there. And now it's been below this blue support resistance lines. We're actually already at the red line. We can see we're retesting it right this instant. We're only 8%, 9% away from bearish levels. Looking at weekly chart, we can see the same picture. So we broke down, major breakdown right there, week of 18th of January. You see, 2 times we retested. I'm gonna zoom in again. Weekly charts are actually quite useful. See right there on the week of 31st of January, and then again on the week of 7th of February, we retested this level once again at this is NASDAQ QQQ at 366. And now we're testing this red support resistance line. This is really, really scary. This is caution. Okay, so once again, take my warning. And small caps. Now these guys broke down even earlier. If we look at where they began this decline, this has started in November. See right there, and then caution right there in January, early January, and then completely in bear market. See, I wrote, this is to my subscribers, avoid. So 18th of January, this is when we said, okay, no more. I don't want to be owning this security. In fact, if you are sophisticated, you could have sophisticated trader, and you're able to trade calls and puts. This is an opportunity right there, 10th of February, to sell it short, and you actually would have been already, in profit by now. And it wouldn't take much to break below this January lows. This is only, what is it, 5% away. So you see, about 5% down, S&P will get to the caution levels. NASDAQ will get, at 8% or so. NASDAQ will get to bearish levels, and small caps will, just collapse most likely if we break down below this January lows. So we're in bad shape, honestly. So looking at weekly charts, same general principle. There's this bearish levels right there, 18th of January, week of 18th of January. Does not look good at this point. So looking at just levels, it looks kind of scary. Now we can look at also market breadth. So looking at market breadths, what is this here? This is NY $NYUD. You can look it up on StockCharts.com. This is a symbol available there. This is advances minus decline volume. So what happens? So this is how it works. We every day, or this is, in this case it's weekly, it doesn't really matter, but we can say that every day some stocks go up, some stocks go down, and they have corresponding volume. So we're going to assign a positive volume if stock goes up, and we're going to assign a negative volume if stock goes down. Then we're going to take that positive volume, subtract from it the negative volume, and then we're going to make it cumulative. Right there, you can see cumulative. So we're going to take yesterday's number that we got and add it to today's number. Pretty sophisticated, right? Because if I don't do cumulative, you'll see that it will be goofy. It'll be just nothing. Doesn't make any sense. So we need to be cumulative. We need to be adding them together. So this is just the way it's calculated. This is advanced decline value. You can also do advanced decline line. Doesn't matter. But I like the volume. It's very illustrative right now. So we're looking at divergence. So divergence started right there, week of June 7th, 2021. In other words, volume started to deteriorate. This number, this advanced decline parameter, started to deteriorate since then, and it hasn't been until January of this year that the stock market also began to deteriorate. So this is what's called a bearish divergence. We got the stock market going up, but the underlying parameter, I guess in this case advanced decline volume, is going down, in fact. So the way I figure, and one of the ways to figure what is the target, is we can look at where this divergence began, and it began around May, June of last year. You can see the lows from May, June of last year line up exactly at 4,100. So for S&P 500. So this is an interesting magic number. We're looking at S&P 500, which is possible, very much possible, to get to exactly the same level, 4,100. You see, so 4,100 level is quite likely. You see, quite likely for two reasons. One is based on advanced decline line, as I just showed, this advanced decline line, and the divergence that we can see there, and also based on the support resistance lines. So this is kind of like double. We have two things that are pointing more towards the downside. Now, can we reverse here and just go up again? Absolutely. Yeah, there's no way to 100% predict the future, but there is a good chance of what I'm saying will come to pass. Now, what's important here is to look at junk debt. So I'm going to look at junk debt once again. There's junk debt on monthly charts. So here we have correlation to S&P 500. So junk debt, high yield bonds, normally, not always, but quite often, do the same thing as stocks. When stocks go up, junk debt also goes up. So you can see it's positively correlated most of the time, not always. So what I'm worried about is, because of the correlations, you can see collapse in the junk debt junk debt began collapsing actually even earlier in November, together with small caps, and completely unraveled. Right there, support broken support. January 20th, we just gave everything away. So around here in late January, early February, I thought we're going to be bottoming. Clearly that did not work, and we made a significantly new low. Right now I think we're trying to bottom. It's possible that we're bottoming here. Looking at a weekly chart, yeah, it's possible we're bottoming here, but we can also just turn around and continue lower, because this is clearly bearish. So clearly bearish security means that we're making lower lows and lower highs. It's quite possible that we're gonna bounce towards like 105 levels, and then we'll need to see what happens there. So if we do bounce towards 105 levels, it will be kind of good actually for stocks as well, once again because of the correlations. You can think of junk debt as a less volatile stocks. All right, moving on to investment grade debt. So this is TLT treasuries. Notice the downward facing arrows here, actual alerts. We shorted them, shorted TLT. This is a successful trade. So at this point, let's say you shorted there on the 3rd of February, you got your target, more than your target. Take some profits here. Move your stop to entry, or maybe even above your entry, well, in this case below your entry, and then wait. So maybe it will bounce, maybe we'll get stopped out. If we get stopped out, we'll need to watch again for a tapping pattern. So a tapping pattern comes up to this red support resistance line, and then closes below it, we'll short again. So what I'm seeing here is this potential bottoming pattern. It has to do with fear. So the more fear in the market, the more treasuries are bought. But because of the way things are happening right now with the Federal Reserve, they're threatening to increase the interest rates. It is affecting the bonds in a negative manner. So we're looking at treasuries bouncing, but will they bounce back into a bull market? That's a huge move still. That's a lot of move for the treasuries. It's possible because treasuries are perceived as safety, safe haven assets, so to speak. So yes, it's possible they'll bounce, especially if there is war actually breaks out in Europe over Ukraine, which would be pretty unfortunate and quite devastating. I'm really hoping that this is not going to happen, obviously, but anything is possible. So yes, treasuries would benefit during the time of stress. Another security that has been benefiting during the time of stress is, of course, gold. So here we're looking at gold versus US dollar, XAU USD. So quite a bit of whipsaws recently, November, December, but then finally we found our direction. So yes, the latest signal was on 31st of December. We started buying it here. In fact, latest actual alert to my subscribers here on 10th of February. Very nice move already. Almost 4% move. Gold miners are also moving higher. We are trading them as well. So yeah, gold broke out. We can look at weekly chart of gold. It looks even better. There's the initial breakout in January of this year. You can see that weekly charts give better results. There are not as many whipsaws as the daily charts. So if you prefer to trade on weekly charts, that's actually better. So, but you only then trade on Friday. Basically, you only trade Fridays. So overall looks quite bullish. Gold looks bullish. Looking at monthly charts, I mean, we can easily take out the highs. You know, 2000 easily we can continue higher. This is a quite bullish pattern. You know, maybe this is like a falling flag kind of thing. Once it gets to the 1000 level, it will be like an inverted, like a cup kind of pattern. So yeah, we could see a tremendous move to the upside for gold. Actually, we could see the entire, you know, this move from 2019 duplicated in the upside. So that's from, you know, 1200 something to 2000. You know, it's a huge move. Now let's get to the sensitive topic. You know, we got all those crypto people. So Bitcoin, you know, it's bearish. So this is where I would short it already. We are shorting it indeed. We're selling it short. There's actual subscriber alerts. So first alert was right there in early January, good for 21%. There's a second alert right there in 8th, 9th, 10th of February. Already nice move in our favor. So, you know, if we look at a little bit longer term, I'm going to look at some of the longer term charts. Here's a weekly chart of Bitcoin, and there's the initial breakdown on the week of January 3rd. This week, this candle looks horrendous. Again, you know, this is a weekly, because of the way the Bitcoin is traded. It's traded 24/7, so we got 2 more days left in the week. But as of right this instant, it looks just horrendous. Easily, we could break down, you know, towards 3000 levels. You know, that's only like 17%. If we take out this low from January 24th, I don't know. It's very, very bad, especially if we take out this low from, you know, June of last year. I don't know, it could go to 0, it could go to negative, really. So let's look at just an estimate how much. So if let's say that this is a measured move, I'm gonna draw in a line like that. So that's some, you know, measured move from the top. When it got to the top, you see, if we do that, we're going to negative. You see, we're going to negative territory. So we actually had precedent when oil went negative, for example. You see, it was negative here. So it's not impossible that we'll see something of the same nature. We could go negative for Bitcoin. In other words, people will pay you money just to get the Bitcoin off their hands. You see? So I'm just not a big fan of this. Same goes for like Ethereum. I'm gonna just go through all of this quickly. Ethereum, same thing. You know, it's all the same. It's already bearish. There's the breakdown, 17th of January. There's a Binance coin, another thing, getting very close to a breakdown. Litecoin, look at this. It's already down there. So bearish security. Engine coin. I don't know what the heck that is, but it's bearish. Algorand, it's already close to lows, making new lows here. And here's the all-time favorite, Dogecoin. Now this thing is just completely. Anyways, so Dogecoin, I actually show you. I'm gonna show it to you. I talked about it a while back. This is where I said it was bearish. It was bearish in June of 2021. This was the initial breakdown. Okay, so yes, You already got, you know, over 50%. You had opportunities to sell it short again, you know, multiple opportunities. So yeah, you can see it's just not going anywhere. Anyways, so this is how I trade. If you're interested, sign up at MasterChartsTrading.com. Go to products, click on products, and select one of the products. I have 3 products, technically 2 trading indicators and newsletters, and you can just get both of them together because it's a much better deal to get both of them together. So if you want the indicators, so we're looking at these lines on the chart. There you can once again you can trade on pretty much any chart. Like for example, here's that you can look at Bitcoin, and we can, you know, see a 1 minute chart if we were able to trade it. So yes, absolutely, you know, sell it short, and about to break out over this blue line if you like that kind of thing. Newsletter, so again, I'm going to cover all of these stocks for the paid subscribers. So if you're interested, once again, sign up. If you have any questions, let me know. Thanks for watching and have another great trading week. Bye bye.